Do you want to better your savings for retirement? Well, here's one way: converting your IRA to a Roth. We have to be prepared for the realities of a longer retirement, taxes increasing, aging parents, long-term health care, you name it. So Roth conversions may be the answer for many of us. Why is that? Well, we're going to talk about that right now here on UBS Trending. Hi, everybody, and welcome to another episode of UBS Trending. I'm Anthony Pastore. Good to have you here. So I'm joined today by my colleague, David Ginsburg, wealth planning specialist here at UBS. David, good to see you, and a lot to talk about today.
Yeah, thanks for having me. Anthony.
Yeah, great to have you. So I know that this is one of those conversations where people think, oh, here we go again, talking about IRAs. But there's clearly a really important thing to be discussed, which is talking about Roth conversions. But before we get to that, here's the elephant in the room. Why do people do Roth conversions? Just lay it out for us.
That's an amazing question. Here's the funny thing. I pick up the phone, and an advisor says, hey, Dave, my client wants to do a Roth conversion. And I say, why? And they said, because they read an article. I'm like,
that's it.
That's it. They read an article. So maybe that article is relevant to them. Maybe it's not relevant to them. Here's how I like to oversimplify it. You are doing a Roth conversion for one of two reasons, Anthony. You're doing it for yourself, right? You're doing it for yourself because you believe that you're going to get a tax advantage by paying those taxes now and use that money over your lifetime. I don't want to say that's a younger person's game, but that's a younger person's game. The second group of people that are doing the Roth conversions are doing it for their heirs. The problem is most of our clients don't realize they're doing it for their heirs, right? They're doing the Roth conversion and they say, oh, I'm going to do this Roth conversion and I'm going to go spend that money in 10 years from now and because I've already paid the taxes on it. But the reality is that's not what they're going to go ahead and spend. We've done financial planning for so long for so many of these clients that Roth asset is such a great asset to have with that tax deferral that you're going to hold that as long as you possibly can. So you're not going to go ahead and dump into it. So the biggest thing that comes into this then is, who are you doing it for?
That's right.
Are you doing it for your beneficiaries? And that becomes the most important question that I find out I have with them afterwards.
I'm so glad we started there because I think a lot of people their ears might be kind of perked up after hearing what you said. But let me back it up a little bit. Not everybody is that savvy about IRAs or what a Roth conversion actually is, like what the differences are between those two different accounts. I think people like, oh yeah, I've got an IRA, fine. What's the difference between the two? Because that's the important part here.
So high level right here. An IRA is an individual retirement account, right? And they're set up for individuals so they can go ahead and get tax deferred by going ahead and putting the money in there and getting that tax write-off right now. With a Roth, you're going ahead and putting that money on an after-tax basis, and then it's growing tax deferred, but when you take it out, then you don't have to pay taxes. Where with the traditional IRA, you are going to pay taxes when you take it out later on in life. So that's the big basic difference there.
Great. Easy enough to, there you go. When people have to spend money on something later on, now that registers, right?
Taxes now or later.
That's right. So when it comes to the Roth conversion, how does it work then that you're, with the tax consequences themselves?
Sure. So very simply, if you're going to do a Roth conversion, that means you have a traditional IRA. And with that traditional IRA, you're simply going to go ahead and pay ordinary income tax in order to turn it into a Roth. So if I have $1 million IRA and I want to make it a Roth IRA, I'm going to have to shell out probably close to $400,000 in taxes to make it into a Roth IRA. Now, the other big part about this is if you have that $1 million to do the conversion, you don't want to go ahead and pay the taxes out of that million, right? You don't want to go take your $1 million IRA and turn it into, a $500,000 Roth.
That's right.
You want to make it $1 million Roth and pay that $400,000 out of another bucket of assets, right? So that's really what you're trying to get at, but that's how it works. One thing I want to mention is a lot of people have some after-tax money or non-deductible IRA contributions. And that happens when people make too much money. That's a curse, right? You can't qualify for the traditional IRA, right? You make too much money, so you can't put into a Roth IRA. So you make what they call a non-deductible contribution or an after-tax contribution. And with those dollars, when they're in your IRA and you have other pre-tax dollars, you basically have to do a pro rata conversion. So if I have a $100,000 IRA and I say 20,000 of it's an after-tax basis, and I say I want to do a Roth conversion of 100,000, I'm only going to be responsible for paying taxes on that 80,000.
Got it.
And that's where also you may hear the term people talk about these backdoor Roths, backdoor Roth IRAs, where they have no IRA assets in their name. They make their $6,500 non-deductible contribution, and then they go ahead and they do a Roth conversion the next day. Whether they qualify because they can do that because there are no limitations on that. So that's a way for some
So
wealthier
that's a good
people.
strategy then, for some people.
If you have the money to do it, yes. As I say, save till it hurts.
That's right. And one thing I want to just say to our audience is that we're not tax professionals at UBS, so if you have questions about how this might impact your taxes, make sure to talk to your accountant or CPA. But we are here to give advice, and of course, we always recommend you work with a financial advisor as well. So, and David is one of our retirement experts, which we're always happy to have. So let me ask you, David, then, is there a generational difference here? I think a lot of people who are younger and starting out are thinking, well, I don't have to think about that right now. I'm too young for that. I'm investing in my 401k or my simple IRA or 403b, whatever the case may be. But should everybody be thinking about this now, or should it be something you do as you get a little bit older in your career?
I think it's a function of how much money you have to save.
There
right?
it is.
It really is, and people ask me that all the time, right? I work with people younger than me at work. I work with people older than me at work, and I got a lot of younger guys that are always asking me, hey, Dave, what should I do here? And I always say, hey, you got the 401k. Make sure you're first and foremost putting in there. And you got a company match. You want to take advantage of that stuff.
Right.
So I tell them that, and I say, if you're filling up your 401k and you still have money extra to save afterwards, let's talk about the IRA. Can you do it? Can you get the deduction? Fantastic. Let's do it. If you don't and you qualify for the Roth, let's do it. If you can't qualify for the Roth, let's talk about that non-deductible and then do the backdoor thing every time.
It's lots of options, in other words.
Lots of options.
Right. And depending on your individual situation is what you want to consider before you make any decisions.
Absolutely.
Right.
And I don't want to, I know we're talking about the Roth conversions,
Sure.
but I also want to talk, because we do have a lot of clients that are above those thresholds. There is I don't want to say a forgotten bucket, but a lot of people have 401ks, and a lot of people have the availability to put money into a Roth 401k as well. So same thing, it's an after-tax, it is plan specific. Maybe I come back on the show and we talk about a whole strategy on how to take advantage of the Roth 401ks.
I was going to say, and as we said in the intro, there are a lot of things that come up. Taxes are increasing, healthcare costs, we're living longer, so retirements are actually longer than they used to be. Yeah. These are very important things to have to consider, especially as whether you're getting started or you're halfway through the latter part of your career. Yeah. Things to think about.
Yeah, absolutely.
Yeah. What should investors be thinking, though, here, Dave, as we kind of wrap up and put a pin in this? What should they be thinking right now as they're preparing?
Well, I think when we talk about the conversion thing and going back to that, it's, hey, if I'm thinking about doing it, I have a large IRA, I'm worried about that, worried about RMDs, and maybe I should do the Roth conversion. Yeah. I think you had that conversation with your advisor of, hey, does this make sense? Who am I doing it for? A 60-year-old woman had a $3 million IRA. She didn't need it. She had plenty of money. And she said she wanted to do the Roth conversion. The advisor brings her on the phone with me, and I talked to her, and I said, that's fantastic. I'm like, what's your rationale for doing it? Well, I don't need the money, the tax. I'm like, so who are your beneficiaries? And she didn't have any children. She has 3 sisters. And I go, that's amazing. I'm like, you're going to go pay $1 million in taxes today for your sisters. She's like, what? What do you mean I'm going to pay $1 million in taxes? Well, we already discussed you're not going to need these dollars, right? So what's going to happen is you're going to pass at 93. Your sisters are going to pass at 89, 90, and 91. They're going to inherit this Roth IRA from you, and they'll thank you for paying the taxes, but they're not even able to enjoy it at that point. So if you really have $1 million burning a hole in your pocket and you want to spend it, why don't you and your 3 sisters go on a cruise for like a year or two, right? $300,000 each. So you need a rationale for why you're doing it, right? Paying the taxes for your kids, if you want to do that, that makes sense sometimes. But you need a real reason for doing it. So it's always a conversation.
Yeah, that is always a conversation. Great story, by the way. It'd be nice to, those are nice problems to have, right, Dave? Well, listen, thank you, David. And I really would love to have you back because there are so many other topics in this realm, 401k, Roths, and all other options that I think our viewers would really tap into. So good to see you, Dave. And thanks for coming by. Come back soon.
Will do.
Great. David Ginsburg, again, a wealth strategist here at UBS. So please make sure to pass this information that you just heard from David on to friends and family who may be, needing some advice on how to save for their own retirement. And for more information on anything we talked about today, make sure you are checking out our website, ubs.com/views. And as Dave and I both said, you've got to make sure that you are connecting with your financial advisor for the best advice for your individual situation or your family situation, as the case may be. Plus, there's lots of other content that you want to take a look at on our newly relaunched UBS Trending Instagram channel at UBS Trending. It's right there on your screen, so you can take a look. We've got some highlights, some reels, and some never-before-seen footage from right here in the studio. Have a great day, everybody. Don't forget to pass this information along to your loved ones and friends. Until next time, I'm Anthony Pastore. Have a great rest of your day, and remember to keep your eyes on what's trending. We'll see you soon.